Hey everyone, Ian McGriff here with ACT Research, and I'm joined by my colleague Steve Tam. And as part of our Forecast Forum series, we're going to be talking about something that's very topical right now, the used truck market. So, Steve, if you wouldn't mind introducing yourself if somebody doesn't know who you are and what you do here at ACT Research.
Well, thank you, Ian. Be happy to do that. And I would add my welcome as well. I'm Steve Tam. I'm a vice president here at ACT Research. I've been with the company since 2000, so I've celebrated my 20th anniversary already. Actually got my start in the commercial vehicle industry with Cummins back in the early 1990s. So I've got almost 30 years in the business. And over the course of that 3 decades, I've seen a lot of cycles. But I'll tell you what, I've never seen one like this, particularly in the used truck market, but in the new truck market as well. So they don't want to hear about me. And let's talk about used trucks. All right.
Sounds good. So, given what our primary focus is here at ACT Research with looking at new truck production and forecasting demand, how did we get interested and start collecting data for the used truck market?
Yeah, kind of I guess an interesting story. Shortly after I started with the company, we were, just sitting around talking about the market and started asking some questions about what happens in the used truck market. How does it work? And like a lot of our products, this one started out with an idea or a hypothesis that we wanted to investigate, and that's quite honestly how a lot of our products actually get started here. And the question that we were trying to answer was, if you're looking at vehicle buyers on the new truck side of the business, are new truck buyers always new truck buyers? And on the used side of the business, the same question, do they stay in that used camp? Or is there ever a time where you see them cross over? Sometimes they buy new, sometimes they buy used. So we did some initial digging on that question and realized that nobody cared. that wasn't the question to be answered. The real question or the real finding was, you had this whole untapped market, the secondary market or the used truck market, that there was just a dearth of data. Nobody had any visibility into it, and so. Being the data folks that we are, we said, well, let's start a process here. Let's start collecting some data from these used truck dealers. So I think it was back in about 2003. We literally did that, just kind of a grassroots campaign. And you remember the phrase email blast, right? So we would send out, or I would send out, a monthly survey to any dealer that I could get an email address for. And just kind of asking some high level questions. So, how many trucks did you sell last month? And, what was the average price that you sold those trucks for? So just kind of, again, very high level to get a finger on the pulse of what was happening in the space. And that was good. We get some pretty decent participation, learned some more about the market, realized that the used truck market was truly untapped. And not very well understood. So, that's our mission in life, is to help people understand this market. So we knew we were onto something, but we weren't quite touching the pedals. And so it took a while, but I think it was probably in the late 2000s, we actually started collecting transaction level data. So, understanding the year, the make, the model, the miles, what engine the truck had in it, what transmission it had, all those spec level details. We added a geographical component, where in the country was the truck sold. And so we were at that point then off to the races. The volumes in the early days were small. We've actually grown the database today to the point that we're in the process of adding some data providers that are going to take our average monthly transaction count for U.S. classes 3 through 8 truck sales, used truck sales, over 10,000 units per month. So we're stoked about that. And looking kind of bigger picture, we will also transcend that million unit mark in our monster database, as we refer to it. So we're thrilled with the growth that we've seen over the years. Having that depth and breadth of information has allowed us to do a lot of really good work, I think, in this space, and understand the used truck market as a standalone market, and then also understanding the interaction between, okay, how do the new truck markets and the used truck markets kind of combine, or how do they rely on each other, or how are they impacted by each other? Mm-hmm. And taking that understanding to the next level. Just a couple stats to give our viewers an idea. Most of the transactions that we see are for Class 8 vehicles. In fact, I'd say about 80% of them are in the Class 8 market. So, and we think that's probably somewhere in the neighborhood of 25 or 30% of the total used Class 8 industry here in the U.S. market. So a very significant sample, but one that we're going to continue to try to grow. So we don't have quite the coverage on the light and medium duty side as we do on the heavy duty side, obviously, but we're working to increase that. But it's the Class 8 industry that everybody is interested in. Right. The other thing that I wanted to point out is when we're collecting this data, it's coming directly from the folks who are actually reselling the vehicles, be they retailer dealers, and that could be independents as well as OEM or franchise dealers. We get a lot of good transaction data from both the wholesale market and the auction markets as well. And we even have some fleets who remarket their own equipment that we're collecting data from. So kind of a broad spectrum there. Again, it tends to be primarily retail. Historically, probably, I want to say about 70% or so of the transactions are retail transactions. When the market is like it is today, that retail number tends to go higher. Sellers want to cut out the auction middleman or the wholesale middleman and keep all the profits to themselves. But that'll ebb and flow. So. But anyway, that kind of gives you an idea of, to your couple of questions, why are we in the industry and what exactly it is that we're doing in this space right now.
So when you said that this was an untapped market, when we started looking at utilizing used truck data and information, did you see any other companies collecting this type of information and being able to have a footprint like we have today?
So we did have some folks that were doing a similar kind of exercise, I guess. If you think about the value guides, so we had the blue book and the black book are a couple that come to mind. They were also collecting some transaction level information, but with a different outcome or a different process in mind. They're trying to put values on trucks today so that buyers and sellers and also lenders in the space have an idea of what trucks are worth today. We tend to be a little bit more longer term focused, right? We want to understand what the trends in the industry are, how those are changing, what they mean to the players in the space, and how folks can take advantage of those or parlay that understanding into, a way to make money or save money or, whatever the case or the objective may be. So, okay. But yeah, nobody doing that type of analytical work on the data in the space at that time, and still that's pretty limited today as well.
Okay. One more quick follow-up on the type of information we're collecting.
Sure. Yeah.
Our primary focus with new production is 5 through 8, but this is 3 through 8. Why the addition of 3 and 4?
Yeah, well, so maybe the easiest way to answer that question is to answer why we're not doing class 3 and 4 so much on the new truck side, and the reason for that is once you get down into class 3, it gets increasingly difficult to distinguish between commercial versus consumer trucks or vehicles. There's just not a good way to do that. And for many, the distinction might be artificial, but since we're focused on the commercial side of the industry, it's important to us. So on the used truck side, it's kind of a manifestation of the fact that we're trying to move into that class 3, 4 market on the new truck side, and we have some success. We are forecasting on the new truck side sales and production for class 4, and because we're already working with those same OEMs who are doing the class 3 stuff, we're trying to drive that wedge and get down there. But so the classes 3 through 8 in the used truck market are kind of our entree into that space. So. Yeah, and the folks that we're working with on the used vehicle side are commercial vehicle dealers. They're not consumer dealers, so it's pretty easy to make that distinction in the used truck market. So yeah.
Excellent. So you've done a really good job laying the groundwork for how, why, what. So what does the market look like today? We know it's hectic, we know it's a little bit crazy, but what's some tactical information about what's happening right now?
Yeah, so the best way to describe the used truck market today, I would say, is that demand is just white hot. We cannot find enough trucks in the used truck space today to satisfy the needs that are out there. And you kind of have to step back a little bit to understand what's driving that, right? So, well, first of all, 5% GDP. I mean, seriously. and then what that means to the freight markets, really, and not just freight either, because a lot of these vehicles are configured to provide some sort of service, right? Construction vehicles or vocational vehicles, that sort of thing. So all the parts of the economy are doing really well right now. So from a demand perspective, or from somebody wants to buy a truck, there are no issues in sight as far as that's concerned. It's the supply side that's the real challenge. And again, it goes back to the relationship between the new truck side of the business and the used truck side of the business. So, the supply chain constraints that the new vehicle industry is dealing with, I'm sure, are no surprise to our viewers. But what they might not think about is, okay, if we can't build the new trucks, then the folks who are going to buy those trucks aren't trading the trucks that they have in their fleet right now. So the flow of inventory into the used truck market, I won't say it's shut off. There's still a trickle of trucks flowing in, but not nearly enough trucks to satisfy that demand that I talked about, that red hot demand. And I mean, you can look around the industry and see indications of this all over the place, right? So think about freight rates, right? It's a great manifestation of kind of the balance of supply and demand. And freight rates are, just like white hot demand, they're through the roof. They're the highest they've ever been in the history of the industry. And guess, especially on the spot rate market side, and guess who the truckers are that support that spot rate market, right? It's predominantly owner-operators and small fleets who are mostly used truck buyers and tend to stay that way. And so they're clamoring. They can't get enough trucks. They can't get them fast enough. So just like those spot rates, right? Let me give you a couple of numbers so that you can kind of get your head around how hot this used truck market is. We take all those Class 8 sales, we dump them all together and just come up with an average number for total Class 8 sales. And our most recent data point, which was full month August, we're still collecting our September data, about $65,000 was the average sale price of a Class 8 truck. And that includes auction, retail, and wholesale channels all blended together, right? So that's a huge price tag. That's up, on a year-over-year basis, almost 50%.
Wow.
It's just insane. You can disaggregate it even further. If you look at just like 3-year-old Class 8 trucks used, they're over $100,000. That's also about a 50% increase from where they were a year ago. At the other end of the spectrum, if somebody wants to save a little money and have an older truck, let's say a 7 or 8-year-old truck, those have actually doubled in price. And you're paying, 35, 40 grand for a 7 or 8-year-old Class 8 truck. Still got a good amount of usable life in it, right? It's not at its end of life. but that's how tight the marketplace is, and that's what the dynamics that we're dealing with today have done to the pricing environment.
So looking down the road, with all the forward looking, as you mentioned, that we do at Act Research, how long do you expect this market to remain in this white hot, capacity, and looking at, just this trickle effect coming into the market, but staying white hot because of the lack of new production?
Yeah, so that's actually a pretty exciting question, Ian, because before I can answer that question, I have to answer another question. So full disclosure, today we do not formally forecast used truck pricing or used truck values. I maybe somewhat foolishly or recklessly or presciently, I'm not sure which, do try to provide guidance to the customers of our products and give them my best estimate of where the market's headed, and particularly when we're doing our seminars or presentations or whatever, but not formally forecasting. And maybe I should say yet, because we've actually last year started working with a customer in particular who came to us with a need to do exactly that, try to forecast where values were headed, not just near term, but even in the longer term. Yeah. And so my colleague, Tim DeNoyer, put together a very nice piece of work, a forecast model basically for used truck prices that we're enjoying right now pretty good success with. If you think about our modeling process, what we'll do is we'll come up and try to figure out what the indicators are that are going to impact pricing or whatever variable, in this case, used truck pricing. Once we've come up with what we think a good set are, we'll backcast that model and see how it did historically in forecasting whatever the variable of interest is. And we've got some very, very positive results on that, is what I would tell you. Now, nobody knew there was going to be a semiconductor chip shortage, right? So, the model did not forecast 50% price increases on a year-over-year basis. But it certainly suggested, based on the rest of the dynamics in the industry that we're experiencing and what we're looking at, that we were going to see outsized increases in pricing. So it called that, and it called it early. Good for people who are looking forward and want to know what's going on. So now we're working to refine that model to come up with, I guess, some variants of it that'll get a little bit more specific and answer, more detailed questions about makes and models and specs and things like that. So kind of stay tuned for that product to hear more about it as we continue that work. But okay, so enough about the commercial. Let me go back and answer your question. Kind of my guidance and maybe influenced by what we're seeing in this model. I mentioned spot rates already in the conversation. So that's one of the things that we really take a good look at to understand, again, that balance of capacity. And right now, looking at freight and looking at the amount of trucks we have and the number of drivers that we have that are available to seat those trucks, it looks like capacity is going to start to rebalance. Well, it's already started to rebalance, but it's going to get pretty close to equilibrium, probably sometime in the middle of next year. And it's not going to be too long after that, I don't think, that you'll start to see the impact of that on used truck pricing. The guidance that we're giving today is that the pricing is going to continue to increase on a quarter-over-quarter basis into the middle of next year, and even on a year-over-year basis. But I'll tell you what, when we get out to third quarter of next year, we're going to be up against some very difficult comparisons. And so we think that we will see used truck pricing start to roll over and start coming down in the third quarter in the second half of next year. So if you're a seller, you want to be careful going into that second quarter what you buy with the intent of turning, right? You don't want to get stuck with overpriced inventory. That's another comment or thing that we could talk about is the inventory, but I digress. So, but if you're a buyer and you can hang on, you'll get a little bit of relief in the second half of next year. But one other point to make about that is, we're rolling over from record high levels, right? So it's not as if these trucks are going to be bargains. The prices are going to be coming down, but they're still going to be expensive.
It's like the housing market right now, right?
Exactly. Exactly. Yeah.
So middle of next year,
Yeah.
but what does that phase of the cycle look like once we get there?
Yeah, so that's that whole series of questions. Where is the market? When's it going to peak? How high is the peak? When's it going to turn? How sharp or how steep is the downturn? That's the question that you're asking right now. When's the bottom? And then, of course, okay, when do we start this whole crazy process all over again? So. I think in the past, what we've seen is I guess what you could call boom and bust cycles, right? So it's either Mach 2 with your hair on fire, or it's like Death Valley. I think, and again, it's not entirely opinion. I think it's in large part based on fundamentals, that this is going to be a soft landing scenario. We're not going to be able to have anybody flip a switch and fix the semiconductor problem, right? Overnight, we're not going to have all the chips that we need to be able to build these trucks. And oh, by the way, it's not just chips, but it's, literally scores of other parts. So that's going to be a long-term progression. It's going to take probably most of 2022 to get the supply chain wrinkles all ironed out and kind of get things flowing smoothly and evenly again. And if that's the case on the new truck side, that's the same behavior that you can expect in terms of seeing new trucks being traded into the used truck market and becoming available for our used truck buyers. All of that, kind of framed in the context of yet another 5% GDP year next year, right, is the expectation. I think that's pretty safe in terms of a consensus number. So still a very robust freight market. So demand is gonna stay pretty high. So like I said, it's a smooth glide path, I think, that we see going into the end of 2022. Beyond that, we'll have to see what happens. It kind of depends how things play out in the economy. We can't stay at 5% GDP forever, right? We'll eventually revert back to that 2.5%. And then, at that point, we start looking at something that looks like what we used to call normal. So.
Well, great. Well, Steve, thank you so much for this insight and breakdown of what's happening right now. Historically, what ACT Research has done and how we got into the used truck market, but also what's happening right now, because this is a very interesting time when it comes to what is happening with that used truck market. And I'm glad that we're on the forefront and being able to look at this type of information, and really appreciate your insights.
No, you're welcome, Ian. Happy to do that.
Thanks, everybody. We'll talk to you real soon.
Take care.